Hospital segment is gaining strong traction with the reopening of the economy as footfalls have increased for elective treatments that were otherwise pushed back during the pandemic. Moreover, the pandemic has helped in creating awareness about healthcare, which is motivating seekers to opt for institutional care. This trend obviously is more to be seen in Tier 2 and Tier 3 cities. Krishna Institute of Medical Sciences, operating out of Andhra and Telangana, is a key beneficiary of this trend. While the stock is up 74% from its IPO price, it holds value due to credible execution in the hinterlands. Being a relatively unknown brand outside its geographic area of operations, KIMS has already proven to be a dark horse among the recent IPOs. General Atlantic, even after selling some stake in the IPO, remains the largest shareholder other than promoters with a 17% stake. KIMS operates 9 multi-specialty hospitals with an aggregate operational bed capacity of more than 2,600. Its flagship hospital at Secunderabad is one of the largest private hospitals in India with a 1,000-bed capacity. KIMS has significantly expanded its hospital network in recent years through inorganic initiatives. It has helped add about 1,200 beds in the last 5 years. The company has a strategic focus on South India's healthcare market, wherein it plays on the strength of scale, leadership and affordability. The company's bed capacity is 1.9 times that of the next largest player in the region. At the same time, average revenue per operating bed is about 20 to 30% lower than comparable private hospitals in South India. KIMS recently acquired 51% stake in Telangana-based Sunshine Hospitals with a bed strength of 600. This takes the total bed capacity for KIMS to 3,600. Sunshine operates at Hyderabad and Karimnagar, which is a Tier 3 town, and hence the acquisition consolidates KIMS' regional presence. KIMS is working on strengthening clinical specialties at Sunshine and also working to relocate Sunshine's Hyderabad unit, which is facing space constraints. KIMS is planning greenfield expansion at Chennai, Bangalore and Maharashtra, which is expected to add up to 1,100 beds. It has already acquired land in Chennai and expects to complete operationalization in the next 3 years. The company is also planning brownfield expansion at Kondapur, Anantapur and Vizag, which should be over in the next 4 years. KIMS witnessed a strong operating performance in the 9 months of FY22, wherein EBITDA grew by 50%. This was helped by strong operating leverage in the acquired assets Angole, Vizag, Anantapur and Kurnool. On account of net strong cash flow generation over the last few years, in spite of regular inorganic initiatives, the company is net cash company. Debt to equity was about 0.62x in FY19. KIMS' growth strategy includes consolidating existing markets by expanding specialties such as cardiology, neuroscience and nephrology, which together contribute about 36% to the revenues. Introduction of other high-margin clinical capabilities such as organ transplant and even oncology and adding more beds to existing facilities are part of the growth strategies as well. While this explains the improving operating margin profile, top-line growth is more of a function of organic and inorganic initiatives. This comes from exploring untapped geographies in existing markets and expansion to adjacent geographies. Recent expansion tilt toward Tier 2, Tier 3 cities suggests that this may garner decent volume growth, though possibly at the cost of margins. Focus towards smaller cities is an industry-wide trend. As per CRISIL, Tier 2 and Tier 3 cities contributed about 67% of the aggregate bed additions by 10 major hospital chains in the last 4 years. Among other risks to watch is teething problems in new areas of expansion. Nevertheless, KIMS through its recent acquisition has demonstrated how operational performance can get transformed within 3 to 4 years. In this context, the metric to track is the payback period for capex investment. The company's capex per bed for Tier 1 and Tier 2 cities is at the lower end of the range for the entire industry. Management mentions that its investments take 2 to 3 years to break even at the EBITDA level, which is a commendable metric in our opinion. The total investment may be recovered in 10 years, which highlights the capex-intensive nature of this business. Having said that, as the balance sheet is lean and cash flow is strong, it may require limited debt fundraising for expansions. Valuations, an EV of 15x of FY24 expected EBITDA, are broadly in line with large peers. This appears reasonable given industry-best operational performance, strong balance sheet and growth prospects. Overall, we believe KIMS presents a play on the structural demand trend for healthcare facilities in the hinterland.